You know, for 30 years, a silent financial earthquake has been building right under our feet. And in August 2024, the ground finally cracked open. We're all just now starting to feel the tremors.
Welcome to the CoinCobber channel. Today, we're diving deep into this absolutely monumental shift in global finance, what everyone's calling Japan's Great Unwind.
So let's just ask the big question right up front. What actually happens when the world's silent money printer just shuts down? I mean, for 3 decades, Japan has been quietly bankrolling global risk-taking, pumping out virtually free money for anyone to use. And now, that machine is being switched off for good.
And look, this isn't some theoretical what-if scenario. This past summer, in 2024, we got a pretty terrifying preview of the answer when a sudden policy change in Tokyo sent a massive quake through the entire global financial system.
It all went down incredibly fast. On July 31st, boom, the Bank of Japan hits everyone with a surprise interest rate hike. Just 2 days later, some weak U.S. labor data comes out, and that was the spark that lit the fuse. By August 5th, it was a full-blown market meltdown. The pressure cooker finally exploded when Japan's own TOPIX stock index absolutely cratered, down a staggering 12%. And get this, that was in a single day. A drop that violent sends immediate shockwaves of panic around the world.
And that shockwave slammed right into the U.S., hitting the high-flying tech sector the hardest. The NASDAQ 100 fell 13% in less than a month as investors were literally forced to unwind everything. So what exactly was this unwind?
To really get that, we need to pull back the curtain on the incredibly powerful and now collapsing engine that's been driving global markets for our entire generation, something called the yen carry trade.
Now, the concept sounds kind of complex, but it's surprisingly simple. For 30 years, because Japan kept its interest rates near zero, the yen was the cheapest money you could borrow on the planet. This was like a global subsidy for taking risks, and it funded everything from Silicon Valley startups to real estate in London.
The playbook was simple. Step 1, an investor borrows a ton of yen in Japan for practically nothing. Step 2, they immediately sell those yen to buy US dollars. And then step 3, they take those dollars and pour them into assets with way higher returns. Think US tech stocks, emerging market bonds, you name it. And they just pocket the difference.
But that entire 30-year-old system, it's all breaking down right now. And it's happening because of 2 massive triggers: a historic once-in-a-generation policy shift in Japan and a pretty startling geopolitical wake-up call.
I mean, just look at the scale of this change. Japan is going from an era of zero interest rates to actually hiking them. It's stopping its massive money printing program, what people call QE, and it's starting to shrink its holdings. But the biggest shift here is philosophical. A strategic pivot away from relying so heavily on U.S. government debt.
So what caused this? A major catalyst was a huge geopolitical shock. After the U.S. announced new trade tariffs targeting key Japanese industries, it was like a light bulb went off in Tokyo. Suddenly, holding U.S. government bonds, the supposed safest asset in the world, was seen as a risk. In their own words, it was no longer equal to security.
And so, Japan started diversifying its huge reserves. Powerful voices in the ruling party began openly calling gold insurance against American unpredictability, and the country ramped up its buying of precious metals and other currencies like the euro and the pound.
So, when a country as important as Japan completely flips its financial strategy, how does that ripple across the world? Well, the aftershocks are complex, and in some cases, completely counterintuitive. And that brings us to a really fascinating puzzle. Okay, think about this. Japan is the biggest foreign owner of U.S. debt. So if they're starting to unwind all that, you would expect U.S. bond yields to spike as they sell, right? But during the August crisis, the exact opposite happened. Yields went down. Why?
The answer is one word: hedging. The big Japanese financial giants weren't just panic selling. These firms hold trillions of dollars in U.S. assets. Now, if the yen gets stronger against the dollar, the value of those assets when they convert it back to yen plummets. So to protect themselves, to hedge that risk, they actually bought U.S. bonds to stabilize their portfolios.
Now, this dynamic puts the U.S. Federal Reserve in a very, very tricky spot. This hedging from Japan pushes U.S. bond yields down, which usually tells the Fed, hey, maybe you should cut interest rates. But if the Fed cuts rates too much, it weakens the U.S. dollar. And a rapidly falling dollar, well, that could be the one thing that actually does trigger a real, genuine panic sell of U.S. assets by Japan and everyone else. And what about the riskiest assets, like crypto?
Well, when the fire hose of cheap money from the carry trade gets turned off, speculative markets feel the cold immediately. During the turmoil, both Bitcoin and Ethereum got slammed, losing about 20% as leveraged traders were forced to liquidate to cover their margin calls.
All of this brings us to the most important question of all. What happens next? That August crisis wasn't a freak accident. It was chapter 1 of a completely new story, a new financial world without free money.
So here's your cheat sheet of what to watch. First, any more rate hikes from the Bank of Japan. Second, keep an eye on Japan's 2026 Shunto wage talks. That's a huge clue for inflation. Third, look for cracks in the shadowy non-bank financial sector, which is where a lot of this risk is hidden. And finally, just keep watching the yen versus the dollar.
So, we'll leave you with this thought. For 3 decades, the entire global economy has been running on a subsidy of cheap money from Japan. That party is now officially over. The question isn't if things will change, but whether any of us are truly ready for just how much.
We really hope this breakdown helped you connect the dots on Japan's Great Unwind. For more explainers on the big shifts happening in our world, make sure you're subscribed to the channel. Thanks for watching.